Good morning, Bay Area. This is your Bay Area Mortgage Planner, John Payne, and this is the RateWatch Now Daily Update Report. Happy Wednesday, everyone. Here's a snapshot of the mortgage-backed securities market yesterday. This is really surprising because we had phenomenal retail sales numbers yesterday, and maybe people just thought maybe it was just back-to-school numbers, and maybe that's why it happened. But it did not budge the market at all. The market just shrugged it off. And we should have been going this way, yet overall we're trending up this way in the trading yesterday, which tells me that we are poised in a very bullish position. What's going to make rates go up today? We have import numbers out. Now, this is not a big market mover, but it does give you a gleam into inflation. This was actually up 0.6%. Also, capacity utilization. Not a huge factor considering what's on the other side, but it was up 0.2%. And again, that would be a market mover, but on the other side, which is trumping it, is the industrial production was down 0.8%, which is huge. And then the imperial index was cut in half. It went from 8 to 4. Also, mortgage applications were down over 8%. So let's keep this in mind of how important this is. Either production, which is not good, or housing, which is not good, or jobs, which we know is not good. One of those three things are going to pull us out of this recession. And right now, two of them are not happening, and jobs are just not happening. So we got a heavy toe ahead of us, folks. Here's a snapshot of what's been going on in the market thus far. We're still moving in an upward trend based on the fundamental news. This is about a 50-50 split between lenders on whether or not they're going to price for the better or for the worse. This is a very interesting thing. This diagram shows up in both this chart, of course, the long-term chart, and as well as bonds. So I didn't bother producing all those other two charts because this says it all. Here's that infamous arrowhead again. Whenever we see this arrowhead shape take place, we're poised for a big move. We saw it back here, and we took a huge drop. Now, yesterday, we tested this trend line, and we didn't have enough power to get through it. We're testing it again today. I do not think we have enough fundamental news to push through this downward trend line. I think we're going to be poised and wait until tomorrow till the inflationary news comes out. When that comes out, I do think we'll have enough power, and we could very well jump back up to the 103s. I say that because of this huge gap down that we still have to cover over here. Now, with that being said, if we push too far into this arrowhead, we could make a run down like we did here. Now, I do know that this is the rollover date, but look what happened the very next day, and we had that same arrowhead position. But I'm more bullish than I am bearish on this, and I do believe that we're going to have a run up after this inflationary news comes out, because it just does not overall look good for the economy. In summary, we managed to shrug off retail sales yesterday, which I feel puts us in a very bullish position in the market. Mixed news today is more helpful than it is hurtful. The manufacturing numbers are very concerning, folks. Manufacturing, jobs, housing are the only thing that's going to pull us out of this recession. And I don't see it happening in either of the three. The chart is poised for a breakout either way, although I am bullish. We're currently testing the upside, and the market may hold for inflationary numbers tomorrow before choosing a position. And I believe it's PPI tomorrow and CPI the next day. I could have those reversed. I do that sometimes. That's all I have for you today, Bay Area. Make it a great day. If you know of anyone that could benefit from my morning updates, please pay it forward. Until tomorrow, Bay Area.